Hi, I'm Larry Cox with Republic State Mortgage, and we are here today. I'm very fortunate. I'm actually in the headquarters of GREEN, the Global Real Estate Education Network. This is where it all happens. This is the epicenter, the core, the belly of the beast, if you will. But this is where all the education comes together, and we teach people how to handle their finances in regard to real estate, purchasing, buying, selling, flipping, refinancing, which is what we're going to talk about today, and that's kind of my specialty. I'm a mortgage lender. By day, I make mortgage loans, help people buy homes, refinance their homes, a little bit of financial planning. I am strictly licensed as a mortgage lender. I'm with Republic State. We're in Brentwood, Tennessee. Our home office is in Houston, Texas. Hearts go out to all the folks in Houston affected by the terrible hurricane and flood, as well as our good friends in Florida, where Doc is. And we shouldn't forget the folks in Puerto Rico at the time. They're really probably have it worse than anybody by far, being isolated and so forth. So hearts go out to the good people of Puerto Rico. I hope we can get them some help. Just awful what these storms have done. All right, that being said, today I've been asked to talk about refinancing. When is a good time to refinance? What are the options for refinancing? You don't have to refinance to save a bunch of money on your mortgage. You do not have to refinance. What you can do with any mortgage at any time, existing mortgage, whatever, just pay more. Just pay more to your lender, and you will shred the amount of money that you're paying over time. You will shorten the term of your loan. You will get it paid off sooner. You'll build equity faster. And you don't have to pay anybody any money whatsoever to do that. You're paying yourself and saving money at the same time. Who could not like that? So to give you an example, there's a lot of places you can go to find a mortgage payment calculator. I like the one that bankrate.com puts out. Just Google up mortgage payoff calculator. It will most likely direct you to bankrate.com. And to give you an easy example and easy to understand numbers, if you are starting a $250,000 mortgage today at 4.25% fixed rate, amortized over 30 years, your payment would be $1,229.85 a month. If you will merely add $200 every month to that payment, over the life of the loan, you will save $52,230. That's $52,200 in savings just by paying an extra $200 a month to yourself, basically, because it goes directly to reduce the amount of money you have borrowed. Give you another example on that. That 30-year mortgage will be knocked down to 23 years. Simply that one easy trick that you didn't have to go and pay title fees, mortgage lender fees, any fees whatsoever. You just started paying more towards your mortgage, and you turned a 30-year mortgage into a 23-year mortgage immediately, overnight. So that's just a great trick, and I would urge everybody. And I probably, I don't get paid to give you that free advice. In fact, maybe you were thinking of calling me and saying, Larry, I want to do a refinance. Well, I'm going to tell you straight up if you do. I'm going to say, have you thought about doing this instead? Now, most mortgage lenders, they're not going to say that. I'm going to say that because, what I want you to do is tell your friends and family. I like to do purchases. I do refinances, but I'm mainly a purchase money lender. I want you to tell all your friends and family, hey, this guy, he did my loan. I called him about a refinance. He gave me another piece of advice. I'm doing that instead. If you're thinking about buying a house, you really ought to go see Larry. So that's the name of the game for me, is referrals and just basically doing people right and earning their business that way. So that's an easy trick. Now, there are situations that a refinance is definitely called for. We have been in an exceptional low interest rate environment now for 7 years. We've seen it a little lower than it is today. We've seen it a little bit higher during that window of 7 years. But overall, we're still in the fours. Sometimes you can get into the threes depending on the program. Even seeing low threes on the shorter terms, like a 15-year, it could put you in the high twos and low threes on a 15-year term. So there's still great opportunity to get out of a higher rate loan. Rule of thumb, I always tell people you need to save about 1%. So if you're in a 5% and you can get to 4%, refinance is probably a good idea. But if you're in a 5% note and you have 22 years left, I wouldn't think it would be a very good idea to go to 4.25 on 30 years, because what you've done, yeah, the payment's going to be cheaper, but you just added back 7 years that you had already worked hard to pay off. So it's always a great idea if you can lower the term when you do a refinance. So if you've been in that, any interest, just doesn't matter, just pick a rate. You've been in it 7-8 years and you're looking at doing a refinance, try to look at a 15-year term, 20 if you have to. 15 is really a sweet spot. That's where the mortgage rates really get nice and low. You'll be surprised. The payment is very affordable. If you don't choose to do the refinance, you can always do the first thing we talked about, which is pay yourself, pay extra on your mortgage every month, reduce your balance, save over time. You'll save a ton of interest that way. So that's just a couple of tools. Now, I do have people that refinance due to other factors. Child going to college might be a good reason to refinance and pull cash out, equity out of your home. A medical emergency, not as keen on seeing somebody refinance to do that, but hey, sometimes you got to do what you got to do. And you need a surgery, your insurance is not going to cover it all, you do what you got to do. So that's a good reason to look at a refinance. A sad reason that I do a fair number of refinances, had a lady email me just yesterday wanting to confirm how much in reserve she would need to do a refinance. I've known for several months that she and her husband are probably divorcing, and she's going to get the house, and the judge is going to more than likely request a court order, heck of a request, that she refinance to remove the mortgage obligation from his credit bureau. So she's going to want to do a refinance. I hate to see that. I don't like to see divorces, but it happens. It's part of life. So we're here to help people in that situation. Refinance for divorce, see it occasionally. Refinance, pull cash out, we do that. Refinance, just simply rate and term to lower what you're paying. Sometimes people want to combine a first and second. Maybe they bought the property 4 or 5 years ago. They took out a HELOC at the time of purchase. They did maybe an 80% first mortgage with a 10% home equity line of credit. The home equity line of credit has been a nice tool, but it's a variable rate. We are probably entering into an interest rate rising environment, and they're nervous to say have $50,000 or $100,000 in a variable rate home equity line of credit. So they want to combine that first and second into one loan. We do that. That's a good opportunity for a refinance. All right, well, that's a wrap on today's session. I appreciate everybody stopping by. And I'm Larry Cox again with Republic State Mortgage. We're right here in Brentwood, Tennessee, and my cell number, you can reach me anytime, day or night, except if it's the middle of the night, I probably won't answer. 615-579-5923, 615-579-5923. Thank you very much.